Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Alongside me, Harry Glantz.
Morning, Harv. So much to talk about, and it's only March 7th, and it's getting crazier out there in the purchase market and the refinance market. But, we have great guests today.
We have an unbelievable show. Becky Alley, of course, from our office, one of the top 1% of all originators.
Hey, I'm super excited to be here. We got a lot to talk about today.
Bummer that Michelle sort of got yanked over by the police this morning on the way in. Michelle Saward, eXp Realty.
Yes, coming in on two wheels. Excited to be here.
Yeah, coming in hot. Coming in as hot as the real estate market.
That's right.
Tim Bartaway comes in also from Premier Residential Services, Home Inspecting Company, and a lot more. Tim, thanks for coming on. You got the right haircut for the show. I appreciate that.
So ladies and gentlemen out there, we have Tim Bartaway. He's a home inspector, and if you've listened to this show once or 1,000 times over the last 21 years, we've talked about the importance of getting a home inspection. Never waive your right to get a home inspection. So today's the day. You can listen, you can call in, you can interact. Tim's here to answer all questions about home inspections.
Hey, Beck, there's no doubt we're going to talk seriously 1 hour about what's going on with purchases. Michelle's always got buyers and sellers. They're lining up now, Michelle. A couple different articles I was reading last night. Of course, we've always thought that springtime was the best time to list your house. You're going to get the most for it. But if you're selling it and buying another one, then you're also going to pay a little bit more for that next one.
Yeah, actually, This is exactly. I feel like I'm blessed to be sitting in the room because what sells real estate is the price and the financing and the conditions. So I'm sitting here with someone that can talk about both, you know, and really what's happening in the market right now. So yeah, I mean, it was interesting. Becky and I are going through a transaction, and you kind of get those buyers right now where the market is, it's just white hot and things are selling, and you've got to be very aggressive in your positioning and your offers right now. And when we look at the numbers, we were just talking about this the other day about, how fantastic rates are right now. And even if you're spending like $10,000 more and you've dropped a half a point, you're paying less overall, even if you're spending $10,000 more than you would have even, 6 months, a year ago right now. And even the amortization over the life of the loan is way less than you're going to spend in the long run.
We have a perfect storm happening. What she's talking about. It's an absolute perfect storm, whether you're looking to buy, sell, or refinance. You have historic lows, right?
It's crazy.
But we also have low inventory, right? So it's about... And the market never stopped. I mean, after Christmas, it was been slingshotting. We were talking about in February that you need to lock it down, find the house that you want. And now here we are in early spring, and it might as well feel like it's the middle of the summertime.
For sure.
Well, also, it's a double-edged sword, right? You can't get greedy. I mean, you always want to buy at the best price, and you want to finance at the best rate, and you always want to get the best deal. But, there is an end point. There is a point where you can negotiate yourself out of a transaction.
I wrote down right here, don't be greedy.
Right? Yeah, don't be greedy.
I wrote it down.
Right? I mean, Michelle, you can really over-negotiate something.
Yeah.
And you could negotiate yourself right out of a transaction.
Yeah, absolutely you can. And so what I wanted to do was, being invited here today, was just kind of go over some bullet points to, put these buyers and consumers in a position to win.
Yeah.
Which is another reason why I brought Tim here, because you can negotiate yourself right out even after your offer is accepted. So there's a lot of things.
Michelle is about to school all of you on how to survive this seller's market and how to not get too greedy if you're a seller. So listen up, call in, because she's about to school everyone.
Fair enough. 248-539-9797. But Michelle, there's no doubt about it. Like I said, unequivocally, if you're selling your house now, there's a shortage of homes out there. The inventory is definitely going to be light. It's been light for the last 4 years. So we're going to see that moving into spring of 2020. The home buying season, we know, everyone knows it started already January 1st this year. So we're already off and running.
Yeah.
Maybe there's a window of opportunity there where you're not fighting with everyone else for that same house. But these days are getting shorter and shorter, and you better hurry up.
Yeah.
Get that approval letter, call Michelle, and really just start opening your mind up to see what homes are out there, what the inventory looks like.
Yeah. And actually, it starts exactly with that. It starts off with really getting the strongest pre-approval that you can to win. I mean, nothing more deflating than what's happening right now. Multiple offers on properties and buyers losing. So really, it just kicks off with coming in as strong as you can. Heftier down payments. Try to pay some of your own closing costs if you can. I mean, there's options that exist if you can't. But really, whatever you can muster up to come in strong with a good down payment and covering some of your expenses going in really helps you be in a winning position. So that pre-approval is just super important right now. I mean, without it, you're dead in the water for starters.
Also, maybe even go back to your mortgage lender. And now with the lower rates, if you got pre-approved maybe 3 or 4 months ago, maybe go back and say, hey, is there any way I can be approved? Let's say 200 was the approval letter, and that's where the maximum ratio is. Maybe now it's 209, maybe it's 215 now. And then, of course, how the property taxes fall into the scenario. But again, this perfect storm is leading into a little bit more buying power, maybe just a little bit more.
Yeah, absolutely. And the buying power right now is super important. Because the buying power is going to leverage you to be in a spot to win. So I think a lot of buyers right now are sort of, having chest pains over, oh my God, I got to, bid up and bid more than asking. But the reality is, with the interest rates being low, even if you're going to spend maybe $10,000 more, maybe you want to make a strong offer and say, if the property doesn't appraise.
Right.
That's such a great number, right? Because
pay
the rule of thumb is right now
$10,000
$10,000 either way. $10,000 in the interest rate market is about $50, right, Harvey?
Okay.
Yes.
So it's about $50 a month either way. So you buy it high at $10,000 more, so you pay $50 more. If you get it for $10,000 less, so it's $50 the other way. So now, listen, I'm not poo-pooing $50. $50 at the end of the year.
Poo-pooing.
Yeah, right. No poo-pooing. Somebody drops a check on my desk at the end of the year for $600. I'm taking it.
Of course.
But in the long run, $600 more a year for the house or $600 less for the house. I mean, come on, right? I mean, really.
Well, amortize that out with where rates are right now.
I'm with you.
You're going to save $10,000 on $200,000 at the end of it all.
You could save.
Yes.
You could save.
Right? Run the numbers side by side.
I'm going to bring Tim into this
goes.
conversation. Tim, we're talking about $10,000 here. So this one family's out there, and they're looking at this house, and it's got some deficiencies. The roof doesn't have that much of life left in it. Boy, you're an important guy to have, because not only is your expertise going out there and pointing out these things, you could put sort of a dollar on it. And there's nothing wrong with really giving all that honesty up front. Now they can make better decisions. I almost think that it'd be nice to walk around with you before I even make the offer, right? Now Tim's out there. He's got that extra set of eyes. And that's what that home inspector brings to the table, that extra set of eyes.
I want my home inspector to hurt my feelings about the house. I want them to tell me this is what you're getting into ahead of time, so that way there's no surprises. And that way I know I'm going to go into it. If I'm going to totally redo it, okay. If I need to run for the hills, and you're the one that's going to speak on that.
It is what it is. Don't shoot the messenger.
So, Tim, let me ask you this. How long does it take? What's the average inspection take? What's the thing that you see most often when you're inspecting a house? And then what's the craziest thing you've ever seen?
I got pictures of that. The most important thing is your indoor air quality in a home. You don't buy a home to get sick. Then the second would probably be your foundation. Everything starts at the foundation and up. Block walls are always an issue. They've always, every 16 by 8 inches, you could have a problem instead of a poor basement wall.
But what you're saying, you don't really hear that, the air quality. When someone's doing a private home inspection, that is not on the top of their mind is what I can't see. And the fact that that's the first word out of your mouth is the air quality. I think that's a real true testament to the experience level that you're bringing to the table.
And you check for that radon test, and you check how else do you check for that?
Well, for radon, let me answer a question. For the indoor air quality, you don't spend a couple $100,000 to get sick.
Right.
Right. No moisture in the home. The only moisture is through humidification on your furnace or by your bed, which are gross, right? And then your air conditioning. Otherwise, you don't want no moisture in your home at all, especially if you got little kids or anything.
I like that.
Yeah.
I mean, my home, wake up though, you're dry and everything, but like you said, if you have a humidifier, you're adding some.
You don't have
moisture.
a dry mouth, bloody nose, especially with little kids, babies. Everyone always had that little humidifier or whatever on the dresser, right? But now you always want it on the furnace. Then you control it there.
Do you see that a lot where the existing furnaces, again, they could be 5, 10, even 15 years old. They're functioning just fine and dandy. You can add humidifiers to these units.
Yeah, it's usually about $450 for a licensed contractor to come in and put in a humidifier on a furnace.
One of the things that, I love having home inspectors on, of course, families can get, Michelle, we can do home warranties that protect us on some of the appliances. The home inspector, he's there to really check out the house, not really the appliances as much. You're not really running those, and they just don't build them like they used to.
I try them all on the dry. I don't turn on your washer, but I turn everything else on.
To check it out. All right, we're diving in here. We're going to expose everything that it takes to buy a house and be successful at it. 248-539-9797. We'll be right back. Alrighty, welcome back to the show, 9:45. What a gorgeous day out there. If you're going to get some things done, today's the day. Definitely go look at a house. Call that real estate agent up and say, hey, I got an approval letter here from Capital Mortgage Funding. I'm ready to go buy a house. Make it a lot of fun for you. That's the way to go.
Yeah, Tony and Roberto, at your service.
That's right. We're here to take you out.
That's actually my tagline.
248-539-9797. If we didn't get to your call and we dropped you or whatever, call on back here. We definitely want to hear from you. There's so much to share. This has been a good show this morning. A lot of topics that have come up that are things that are real. That's definitely going on. Becky, as you know, we got to touch on the refinance transactions out there. Yes, if you refinanced your house already in 2019, just at the end there or just closed, take a look at it soon enough. Again, usually we need you to make 6 house payments. All the lenders out there agree. We don't normally step on each other's feet out there because of the recapture fees and stuff. There's opportunities out there for families to refinance again. And I bring it up for a couple different reasons, Beck, but one of the number one reasons is if you're getting blindsided, Tony, as we talked about, so many families out there, the lack of education, so they close on the house, and we see this back, they're all happy and everything, but next year the city reassesses your home and how that all works. Reassessment of homes could really bring your property taxes up. Now, there's so much to know about there because it all has to do with Proposal A that was way back in 1994. So in 94 and 95, the way the Michigan set it up, was they would do after your house was reassessed, then it could only go up. Your property taxes could only go up based on inflation and never more than 5% in any given year. But after your taxes become uncapped on a house, if you're buying a house, Tony, as you know, you guys all know, and you buy and you close and the taxes are $3,000 a year, but that family had lived there for 10 years. Yes, you can calculate it prior to closing. Your taxes will probably be over $4,000 the following year.
Yes.
Reassessments list. The cities aren't playing around. We went through really tough times here. 2007 to 2013, 14, the municipalities didn't have any money coming in. People were walking away from their homes. They weren't paying their taxes. Associations were getting burned. Well, now's the time with all the homes being sold and flipped. Roberto, you see it so often.
Right.
Yeah, they're going to come and get their money, and that's okay. I don't mind paying. I pay for the millage, and we all vote for the millage when we want to increase the fee or the pay structure for our police, our firemen, our libraries, our schools. If you're moving to that city, you want that. You want higher taxes on that stuff.
Yeah,
Well,
you want to know
maybe.
that you're buying a house in a great community.
That's right. Yeah, I mean, it's definitely something you got to pay attention to because we take buyers out, they're searching all over the internet and they go, oh, wow, these taxes are really low. And that's where, you have to let them know that they could be much higher. We look at how long that person had lived in the home. And the longer they're in the home, obviously, the higher those taxes are probably going to go up. So that's something to pay attention to when you're looking at homes.
Yeah, actually, it's on the internet, too, so you can definitely punch it in there and sort of get a preliminary estimation or guesstimation of what your future taxes could be in any city. You can share that with any cities. Find out what millages they might have coming up, what votes might be coming up, things
You
like
can
that.
call the city and say, I'm looking to buy this house. I would like to know what my projected taxes would be once they become uncapped.
All right, welcome back to show 915. If you're just joining us, the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, NMLS 2289. And we take all your calls at 248-539-9797. Got Lee calling in this morning to start things off. Hey, Lee, welcome to our show. Go ahead with your question.
I wanted to know just in general what you guys think that the market's going to do, because I sold my house, it'll be almost 3 years ago this summer, and I ended up renting because I couldn't find a house within 60 days that I was happy with, and with the market being so competitive and things moving so fast. So here we are on the third spring that I'm going to be looking, and it looks like the market's even worse than it was the last
I wish we could have had your real estate agent talking to buying a house that
3
year.
years ago.
What do you think, Michelle? Where is this market headed?
Yeah, actually, we were just talking about this. I think 3 years ago, it was extremely busy. And then the past 2 years haven't been as manic as we're seeing it starting to come up and be again now. So welcome back, Lee, to a crazy.
Thank you.
Well, happy to have you.
Very discouraging.
Yeah, but here's to the benefit. Money is cheap now. So yeah, the market is competitive. You're a non-contingent buyer because you're renting. You don't have a home to sell, which is usually one of the biggest challenges
Absolutely.
Yeah, you've been there. You got the T-shirt, right?
Yeah.
So I really do think that this is a fantastic opportunity right now, especially for somebody like you, that you don't have a house to sell. You can pick and choose and be free to move when you need.
Lee, what are you looking for in particular? Are you looking for a smaller house? Are you looking for a condo? Are you looking for a colonial, a ranch? I mean, it's specific to to the market. I'm sure Michelle could tell you there are other properties moving faster or slower than other specific type of properties.
Mm-hmm.
Well, I'm looking for like a small ranch in Royal Oak, and that market's been a little tough. Me and my realtor have been working together, like I said, since I sold my house.
Yeah,
and it's just been
been
a little frustrating with
your poor
lack
agent.
of options, and then also how fast everything is selling.
I hope the agent is a friend of yours.
3 years, you might have to put your pen to that contract soon enough. But how about those other ideas? And I'm sure you are, Michelle. You might looking at those other cities, like up here in Royal Oak in that area. So now all of a sudden, Madison Heights and Clawson falls into the conversation. Hazel
Berkeley.
Park, Ferndale,
Well,
Berkeley's already
expensive.
they've already gone up. So
Yeah.
you're already exploring these different opportunities.
yeah.
I am looking in Clawson as well. I moved from Ferndale, so I'd prefer, I'm kind of looking to be more in the Royal Oak or Clawson area.
Yeah.
Mm-hmm.
So Clawson is also one that I'm looking at.
Yeah, these are very competitive markets. I mean, she's got a valid point here, but I'm just going to go back to some of the benefits, Lee. I mean, don't feel so deflated or beat up by it. I mean, one of the things that you can offer in being strong is that you're flexible with renting with occupancy. I mean, that's one of the big factors also for home sellers right now is they're in
Absolutely.
the spot you were 3 years ago. Like they're looking at the same situation of like, okay, if I sell, where am I going to go? And what does that look like for me?
She doesn't need to move in right away. She can give max amount of occupancy to them.
Yeah.
Yep.
So I've got several transactions right now where buyers have wrote offers on the property and it's like, hey, we're ready to buy as soon as you find a place. And, and it doesn't preclude my buyer from continuing to look and find something, but we just got to put them on notice if, okay, they've locked in with a seller for 30, 60 days. That seller hasn't procured what they're looking for and that buyer's going to move on to something else. So you're in a spot to be able to offer something like that. You're, like I said, you're also, I would hope, not having that contingency, you've got your cash out and you're in a financial position to be able to
and I'm
pull the trigger.
Pre-qualified, ready to go. So
Yeah. I think you're in a good spot, really. I just think that
Go find something you like. Make some offers, eh?
throw some offers out there and see what sticks.
Well, and this year I just started looking again. Last year I did put in offers, and again got beat out on some of them, or just haven't found the right thing. I'll see something on a Monday, and if I'm not able to get in it by Wednesday, it's already gone.
One of the things that I'm doing that's also been pretty successful right now is looking at off-market properties. People that got frustrated took their home off the market previous. So have your agent check some off-market properties that maybe they are expired listings or withdrawn from the market. He can reach directly out to that seller, be a little bit less competitive if you're the only person going in to look at it. So
Sure.
I wouldn't take that off the list completely. That could really be a benefit to you. And some of these properties that have been on the market for a long time, maybe those sellers just weren't realistic in their expectation going into it. So you might have a little bit more leverage with people like them.
Can I ask you one more question? I'm just wondering, do you have an opinion as to why there's such low inventory?
That's a loaded question.
Well, the cost of building has gone up so high.
tremendously.
It's all good stuff, though. But they're starting to pull more permits. We're seeing new construction across all the counties here.
Oh, yeah,
so there are some opportunities out there. I just think maybe this could be your spring, 2020.
Yeah.
In regard to Lee, thanks for the call. We're going to move on here, but it's a great call. We'll follow up
Absolutely.
with
Thank you very much.
Thank
Good
you.
luck,
We
Lee.
really appreciate those questions.
Have a great day. Thank you.
So to answer Lee's question, why there's so many people, there's less inventories, because back when equity started becoming, more and more and more, and purchase prices gone up, and home values started to, really move up from 2008, right, through 2009, 10, then booming 11, 12, 13, all the way to now. People were improving their home, okay? So if you would drive through the Home Depot and the Lowe's parking lots, remember we talked about it on our show, you would see a lot of people that love the house that they're in, and then they were doing additions, and they were really improving their property. So we talk about it all the time, the quality of life for existing homeowners that stayed in their house. Now, some people took advantage, and are still taking advantage of a seller's market right now, but a lot of people just stayed put.
Yeah.
Okay, so that's what we're seeing, and that's a lot of people did home improvements to improve their quality of life. Put in the pool, maybe redid their basement and added things on. So that's really an answer. It's not the answer, but it is an answer as to why there's less homes on the market.
The current rates right now, too, are also going to be bringing out these buyers that have been on the fence for some time now because there is more purchase power. And it's now going to start actually adding to the low inventory because now you're having an influx of buyers and people that are hesitant to put their houses on the market because they don't want to end up in Lee's position. They don't want to end up being homeless.
248-539-9797. Want to hear all your questions. No doubt, Michelle, purchase applications remain 10% higher than a year earlier, 3 weeks in a row. So
I think it just in this week alone, I think it probably doubled.
Right, enough business this week.
Yeah.
But Michelle, she said something that sort of caught my attention. This great relationship she has with her agent, and that's what it always should be.
It's important.
I talked to some people this week. The one guy told me for a refinance, he never even met his mortgage person. He knew nothing about the transaction. He didn't know anything about his mortgage. You got to trust and have this real estate agent who's representing you. They have to know what you're thinking. And you can't wait. In today's competitive market, just make the offer.
Yeah.
Make the offer. Don't wait till Wednesday to see the house. Your agent already knows that house is the winner for you because you've already been working with them for 3 years. 3, 6, 12 months. If that agent doesn't know what you want, then you guys have to sit down and have that conversation. At this point, come in at highest and best.
Yep.
If you want a shot at it, if they accept your offer, now you got decision-making time. If your offer is accepted, drive over to the house. This is exactly what I wanted. Now you can move forward.
If you find a home you love, buy it. It's okay if it's the first house that you see. If it's the one you want, pull the trigger and be in a position to be able to pull the trigger.
Right, and then I'll tell you, got to have that inspection. Do not waive that right to an inspection. Period.
Well, that's what I was going to say. It's like a phrase that I've been telling my clients. If you're going to sleep on it, you're not going to be sleeping in it. And
I like that.
and if people are hesitant, like, well, I really want to think about it, I say, you know what, make the offer. You have a 5-10 day inspection window where you can come back as many times as you want for as many reasons as you want. Right. And then somebody like Tim can come in and do what he needs to do and let you know what to expect.
You don't want to ink up a purchase agreement and have someone walk away from it, and then they've already spent the money with the inspection. They've done the sewer line inspection. They've done everything. We want them to move forward. Right. But if for some reason it just doesn't work out, okay, you're not out a whole lot of money. You were moving forward. Now you even have educated yourself even more on the inventory and what you're looking for in the next house.
To your point, I'm working with a buyer right now in Chicago. Okay, so Chicago properties, like Michigan properties, they're going crazy.
Yeah.
So they put an offer. The offer got accepted. They did the inspection. It needs a roof. It needs flooring. It needs new electrical. It's an old house, but they want the house. They're sitting on it right now. They're going to go through all the bids and everything like that to make the proper decision. And they're going to let somebody know on Monday if they're going to go through with the transaction or not based on the inspection.
Yeah. Yeah.
I mean, this has happened. This is real world stuff that people have to do if they want a property.
I mean, Becky and I were kind of laughing about this. It's like, you don't want to buy a maintenance-free house, right, Tim? Like a house, maintenance-free meaning no one's done maintenance on it in 20 years.
Oh, no, that's hard. That's hard to do.
Yeah.
Just the caulking.
Just the caulking.
Yeah, that's second floor windows.
It is a constant thing. Tim, I think about home inspections. I think about knowledge of home ownership. And, so often when I talk to people, to me, it's always about the education. I didn't have a lot of money to blow when I was 23 and just got in the business on my first house. I had to buy something, I think anyone out there, I had to buy something that had what they call good bones, Maren Morris there. You got to have a solid house. You got to also know what your budget is. Look, if you're the richest guy in town, it's no problem. You can fix, money can fix a lot of bad things. But if you're working on a budget, you have to have some knowledge behind you. And like you say, you walk in a lot of houses, Tim, they might not have touched them for 20 years.
Right. The best thing is your home has to be weather tight. That means it's got to be painted, stained, tuck pointed. Then if it's that, then the property's preserved. Nothing's getting destroyed. Then everything inside is just cosmetic. Look at Pinterest, pick something out, change a room.
I like that. I like that, Tim.
Tim looks like he's always on Pinterest.
My wife shows me a lot.
I'm impressed Tim knows what Pinterest is. I mean, that's good.
Well, every home buyer should know what Pinterest is.
There you go.
But that's where you get all your ideas
My
from.
basement looks like Pinterest, so I know what Pinterest looks like.
All right, buyers
Sure
should
does.
definitely start with a plan. Do you have strong employment and a good job? Job security is the key. And if you have some funds to close, don't wait. Prices aren't going down. Give us a call, 248-539-9797. We'll be right back. All righty, welcome back to the show, 9:31. What a gorgeous day out there, 40-degree weather this weekend. No, not bad for February 22nd, Becky.
No, it's not.
All right. You
I'll
listen
take
to
it.
The Hardcore Mortgage Real
Everyone's
Estate
got that
Business
itch
Show.
because it's been so nice lately.
I know.
It's like
cold, but
48
it's-
tomorrow, man. It's gonna be
Yeah.
warm. It's gonna be like hot,
All right.
short weather.
We don't have one of those springs, though, where everything starts blooming and then all of a sudden and then we have a deep freeze again because that did ruin some trees in the past. So definitely we'll keep an eye on that here. But we want to hear from y'all morning long. 248-539-9797. Making real estate and mortgages as fun as we can here. Let's move off to Fred because, Fred, you got a tough question. Questions about trying to buy a house with a bump on your credit. Tell me more.
Well, I have a bump on my credit, a divorce, and a bankruptcy. Bankruptcy probably about 5 years ago. Divorce 3 years ago, and I'm in the market, I believe, to buy a house.
No,
And
it's
I don't
great.
know-
Tell
I don't
me.
know.
Go ahead.
I don't know what to do now. I mean, I've fixed my credit. My credit is going up, and I don't know. I need a little guidance or direction.
Well, the first thing is we'd get you in the office or we could do it over the telephone to get you moving in the right direction. And we got to run that mortgage credit report. So often families are confused with the consumer credit report versus the mortgage credit report. And the model that they use for the mortgage credit report, yeah, it's a little bit different. But we'll have to dig into it and then see what the credit looks like. Do you know anything about it? Is it a situation where you just completely walked away from credit cards, some debts, or a car or repo? What do you have that's so bad?
It was credit card.
Okay, but you did the bankruptcy, you said.
Yes.
So everything's been, was that a Chapter 13 or 7?
I believe it was a 13.
Okay, so have you paid all of that off? Are you still paying that, or has it already been discharged?
It's been discharged.
You can buy a house
yeah.
one day
Yep.
out of
That's
discharge.
Yep.
Yeah,
I'm
you
sorry?
might be able to buy a house right now, Fred. Yeah.
Oh, really?
Yeah, one day out of a Chapter 13 discharge with a letter from the trustee allowing you to move forward. Yeah, you're ready to go right now.
Oh, sweet.
Yeah, how much? I'm just curious too, Fred. And of course, we'll call after the show and get a little more technical. We don't want to tell everyone your secrets here, but real quick, what have you been paying in rent over the last couple of years?
Oh, about $500 a month.
Well, that's pretty
Oh, that's,
cheap.
yeah, that's a steal.
Yeah, that's a steal. Have you been saving money based on that? Have you been able to save some money? Oh, good. Fred, you sound like you're going to be a buyer. Let me just ask you something. When we call you later, what cities are you going to be looking at?
Oh, probably downriver.
Fantastic. All right. Plenty to choose from. And the girl right to my right here, Becky Alley, she
Yeah.
knows a lot about it because she's from down there. And, of
Yep.
course, we'll get you all set up. So, Fred, it's a great call. I'm glad you made the step just to give us a call. Cost you nothing, no obligation at all, just to find out where you stand in all of this. So it's a great call this morning. Thanks a lot.
Yeah, a lot of people think that they're not in a position. You know, they think they're not going to be ready to buy a home, but the reality is that sometimes like, oh, I'm not ready. You are. You just were afraid, and we just need to answer your questions and look at the credit.
Educating
Yes.
everybody, helping and educating. Just,
It's
I mean, what a
everything.
new chapter to this guy's life.
Yeah.
Right? It's going to be completely
Clean
new,
slate. Yep.
clean slate. He's going to be able to build wealth for himself and be able to go forward and really feel good that he's been able to like walk through the whole thing with his bankruptcy and
a
his
lifestyle
divorce. I
thing.
mean, it's a whole
Yeah.
new chapter.
It's time to turn the page.
That's great.
We get
Good for
people
him.
like this all the time, and all of a sudden they buy a house, and now they're renting a room out to their friend, and you know
Yeah.
it's cut in half, and there's a lot of great things that can happen. Let's move on with the calls here. We got Terry. Terry, I'm not sure where you're calling in from. You got a question about an appraisal that didn't match up. That's a good one. Go ahead, Terry. Tell us more. Welcome back to show 930. It's the Hardcore Mortgage Real Estate Business Show on this glorious March 7th, 2020. Of course, we're going to move those clocks forward tonight at 1 or 2 in the morning whenever you get to that. We got a great show going on here. We want to hear from you. 248-539-9797. Michelle Saward, eXp Realty. She runs the Downriver area. I just hope you continuously rock Downriver.
She
Hey,
runs
I
it.
always wonder. I text
She
her randomly. I'm like,
runs
I hope you make
downriver.
$1 million.
There's a
today.
couple
I randomly
offices,
hit
and
her.
again, Harry's got a leash on me, so I can't say the company. There's a couple bad real estate firms
I
down there.
know,
You are
whatever.
not one of them.
I mean, they're
Thank
everywhere.
you.
So
All right, let me-
I like you guys.
Yeah. Hey, Tim Bartaway, also Premier Residential Services. Tim, always great to have a home inspector in. We want to hear from you again. 248-539-9797. We'll talk about interest rates. Let's go to Durant. You got a call. You want to talk about interest rates and refinancing. Go ahead, sir.
How you doing? I'm actually in the
process of having a home built. So I'm doing a construction loan.
Yeah, congratulations.
And thanks a lot. Out in Southfield, there's a couple plots of land. My question is, my loan officer locked me in at 4% on February 27th. And he just sent over the paperwork. Hey, Duran, sign this stuff. Let's get this going. Since February 22nd, the marketplace has changed significantly regarding interest rates. Can I have him go back and explore if their bank has lowered their rates at this point?
How long did he lock you in for, and how long is the project going to take?
The project, they give that 1 year kind of window for them to complete it. He locked me in until like mid-April.
So what does that do for you if you can't close in mid-April? Are you planning on closing in mid-April?
Well, I can close. Everything's 4%. I put my down payment down, but 4% seemed high based on what we're hearing in the marketplace. When I'm hearing on the news, can I go back to him and say, hey, can you unlock it to lock it again?
You can, and you can ask him if it has a float down option on the transaction.
So you have a construction loan that converts to an N loan. Is that what you're telling me?
Correct.
Okay, that's fine. I like the idea. And this house is complete in April, so you're going to have a certificate of occupancy here in the next 60 days, let's say.
Well, the house hasn't been built.
But you're talking April of next year.
Correct. We do the close.
Interesting.
Yeah,
So what he's saying here, this is interesting.
Yeah.
So a construction loan that converts to an N loan, you're at 4%, and you're saying to yourself, wait a minute, I don't want it to convert at 4% in 2021.
Right.
I want to see if you can go ahead and lock me in maybe a quarter or 3/8 loader.
That's why I'm asking on this construction part, is there a float down option? That's what you have to ask them. Ask them if there's a float down option on it. And
Got it.
you could use this as a sounding board. I like the fact if you trust this person and you trust the institution and you have a relationship with them, listen, 4% is still cheap money. Again, you know, we started out, don't start nickel and diming on it. 4% is still pretty cheap, but ask if there's a float down option on the end loan.
Understood. That makes sense.
Right?
Now, some lenders don't allow that. We're one of the, we do allow our clients to always maintain the competitiveness of the market. So it's definitely worth you having that conversation. But what Harry's saying as well is that we're not here to step on anyone's toes. If you have a great relationship with this lender, then pursue the transaction with them. We're always here to kind of educate you, answer any questions. But it happens. And, at the time, 4% was great. And who would have thought that the market was going to bottom out the way that it did? But, it's stabilized now, because when the Fed announced a rate cut, what that meant was they didn't mean they cut the rates 0.5%. They just cut out the bottom that was falling. So now we're on the floor. That's pretty much what you need to kind of hear.
Right.
So definitely reach out to your guy and see what he can do for you.
Durant, thanks for the call, man. I definitely will follow up with you and give you some more information.
Strong call.
I built a few homes in the past, and it's really fun.
You're like a king of new construction.
Back in the day, I was here, not as much anymore. But definitely, it's fun to build a new project. There's a lot of other things to worry about too. Is you got a lot of things going on, and keeping those contractors moving forward and getting that house completed. Why the rate and why your construction loan is still intact for a year is pretty important. Also, if it just works out at the end of the day next year when he closes and the rates are a little bit better, Harry, maybe they're close to where they are today.
Wait, maybe they'll be better, maybe they'll be worse.
Okay, so
you
fine.
don't know, so lock it in and let's go. But he still should inquire if he can get a lower rate now. That doesn't hurt.
Yeah.
Okay, it doesn't hurt, but don't worry about it because he still has a project to complete in a year.
Yeah.
Right?
And
maybe a small fee to unlock that. Maybe even a small fee.
Yeah, so what he touched on is something that's really, people are starting to be a little bit greedy right now. And I'm not saying there's anything against, trying to get the best deal out there for you, for your family and all that stuff. But if you're locked in at 2.625 on a 15-year fix, that is a stupidly low rate, okay?
Are they that low? My Lord, okay.
Yes, okay. So then if you're out, I heard I can get 2.3. I mean, okay, if you're already in the process and you're working with someone that you feel comfortable with, do not just abandon ship and get lost start working with a stranger, get lost in the transaction. Now you're back behind all these other applications that recently came out. Now you're looking at a 120-day transaction. And to put in perspective, 2.5 versus 2.6 on a $200,000 loan is going to save you maybe $15 monthly and maybe $2,000 over the life of the loan. It's not that significant.
It's not worth it to lose what you have now. And, I'm very close with a guy on the radio and on TV that has a saying, I know it seems like rates are going down to zero, but they're not going down to zero. No. I promise you that.
We're not issuing negative interest rates anytime
soon. We're
soon.
not going to pay you to do a mortgage. It's just not going to happen. Yeah. So you know what? Lock it in. Cover yourself. Protect yourself at this historic time. And again, don't be greedy. Just don't.
Right. Yeah. And if you're with us as well, like what Harry was mentioning, we do allow you to we maintain our competitiveness. So if the market is jumping, we do have that float down option for you. Some companies do not. So don't talk to a stranger. Always come back home. Come to us. We'll make sure that you're always in the best position possible.
There you go. Get in touch with Michelle and some great agents out there too. Housing shortage will continue to keep the sector strong. There's no doubt about that. The American dream is alive and well. According to the new survey, a whopping 84% say the home is a priority now. That's right. A home is something that even the young generations, the Generation Zers,
the millennials are coming
they're like,
out.
oh no, I'm getting myself a house. 4 to 5 surveys say home ownership is a priority. It was just 75% just 2 years ago. Yeah, it's a priority. There's
Come
definitely...
on, where else are they going to invite their people over to have vegan dinners?
Exactly.
I mean, come on, man.
I like that, Harry.
Millennials have to buy a house because they'll have all their friends over. They can do the vegan thing and
Love
yoga.
It. All right.
They have brunch and dinner.
You baby boomers are also vegan, though. That's okay. Here, we'll get to that.
Okay.
Well, this refi boom.
I'm going to take a lot of heat for that.
You are.
It's okay. I want to hear it.
The epic refi boom is obviously going on. It's alive and well. It's all about the economic impact of this COVID-19, the coronavirus. It's definitely affected and scared off the stock market. The stocks just tumbled. I mean, I don't see it affecting our first-time home buyers. I don't see it affecting our buyers between 100 and 400. Maybe it'll slow down some of those bigger buyers, the million-plus buyers, because a big chunk of their portfolio's gone. I mean, that might put a little scare in it, but I truly don't see that affecting. Now, a month from now or 2 months from now, we could see a little bit of an impact if people were sort of looking at their nest egg and saying, boy, it's shrunk to nothing. Are they going to hold off on that purchase, Michelle? I don't know. I don't really see it, but tell me more.
Yeah, I would agree. Maybe in some of the higher price points or a much more conservative mindset. But if you even go bigger scale, I mean, you're seeing, like, what is it? BlackRock, like investment brokerage for BlackRock. I don't want to black up. Okay, Blackstone, BlackRock. Okay, BlackRock investment firm. They're buying up like blocks and blocks of homes. Like they have a goal to like double their portfolio in 8 years. And so if you're thinking even on the bigger scale and even bigger than, us sitting here in the Metro Detroit community, they're locking in debt at low rates right now. So I mean, even if it is coming to like refinance or get yourself in a better position, I mean, these people who make a lot more money and do a lot more transactions than we do in a year, they're seeing this as an opportunity.
Yeah, this
time.
is when those people make the most money moves. Scared money doesn't make money.
Correct.
So if you're thinking,
I like that.
If you're thinking about buying that house, do it because the money is. We've never seen this low ever.
I'm gonna throw some other stuff out there. All right, so we got this refinance boom going on, and a lot of our families out there, listeners out there, had put 5 or 10% down, maybe even less, 3% down. We did a plethora of buyers like that over the last few years with the Home Possible and the different programs that are out there. Even zero down buyers, USDA loans.
Yeah.
Now's your opportunity to get rid of that PMI, that private mortgage insurance. Home values have gone up. We're going to see it this spring.
Yeah.
We're going to see some prices go up. Maybe now, Becky, I don't want to get into PIWs as much, but there's a way we do mortgages. The families don't know this. The insiders in the mortgage industry only know this, that a lot of times if we punch in the information in the computer, you've been in the house for 2 years, we're able to waive the appraisal called a property inspection waiver. It's very popular. I have some families ask me, Harvey, what is this? It basically means that the system has recognized that the home has 20% equity in it, and they're not making you do that extra step. So it does save you a little bit of money at the closing table. And again, there's lots of different reasons, Becky, as you know, to refinance your mortgage, debt consolidation, eliminating PMI. Add a few more to this, Beck.
Okay, so a big thing for me right now is shortening your term. Take advantage of these lower rates. So, for example, a year ago, rates were almost a 0.5% full point higher, depending on what you were trying to do. So I have a specific transaction. It's a $200,000 loan. So for easy math, we're lowering their rate a full percent. They're saving $90,000 over the life of the loan, and we're knocking 9 years off their term. So you're saving $60. You're saving $90,000 of that imaginary stacked up cash. Just because you don't see it doesn't mean it's not going to line your pocket at the end of the day. And they're now going to pay their house off faster. So these lower rates are now putting you in a position where you can save money and pay your house off faster. It's smart money. So talk to us. It doesn't matter whether you bought the house, 6 months ago, a year ago. Everyone's kind of in this perfect opportunity to take advantage of the storm while it lasts, because it's going to start to stabilize. This isn't going to stay like this forever.
Right.
If you could save money by shortening your term, and Becky, I have a client I'm working with, I'm saving them $21,000 in just 1 year.
Just from signing their name.
Just 1 year.
Well, I'll
Just
take that
signing
one.
it.
All right,
That's wonderful.
248-539-9797. Come on back with your calls. We'll be here. All righty, welcome back to the show, 917. If you're just joining us, it's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289. You can find us always at 1-800-LOW-RATE, the best mortgage banker, or out of the state. We do every state.
We're all 50 states.
1-800-3-LOW-RATE.
Yep.
If you're calling from out of state, but again, right here in Michigan or locally, 248-LOW-RATE.
Or if you're cool enough, you just hit Harvey right on his cell.
Just call me right on my cell. But anyways, bringing some great guys here from eXp Realty, Tony Camilleri, Roberto Calderon. You guys are just bringing a ton of knowledge. I think we might have to pay the station a little more and have you guys stay on for a couple more hours. But a lot's to talk about. And Tony, the credit piece is just humongous because families need to get a hold of this credit. And one of the things is for first-time home buyers is getting that credit score up, or people have had some trouble in the past. You just told me something. I think it's a home run. So now you've got this new thing set up with Experian, all right? Experian or Equifax?
Equifax and TransUnion.
Tell me about it.
Yeah, so basically, if you're a renter, which 40% of Americans are renters, you can actually take your positive rental history, you've been paying rent, which is your largest expense, right? And get that put on your credit report. And we can go back up to 2 years for both Equifax and TransUnion, which is going to definitely raise your credit score.
Okay, so what Tony's saying is, let's just say your credit was less than perfect the last couple years, and something that is going to prohibit you from having, so you could clean all that up and start paying things on time. But unfortunately, if you don't have new debt being introduced, that's good, positive credit happening for you. Sometimes you're not going to see those positive improvements on the score. So what he's saying, you're renting, why not have that rental history that you are, vigilant about paying on time work for you? So what he's saying is, with that documentation, we can add that to your credit report, and now you have this great rental history that's going to count towards you and getting your scores improved. And that's why, again, it's vital for us to look at this information. Harvey and I instantly, and if I look at someone's credit score, I'm going to be looking to see what they can do to improve it. And that, we can't talk about it enough. Because even though your credit's not perfect, that doesn't mean you can't buy a home. And that's what FHA and, so like in your mind, I need 20%. You don't. Okay. That's what FHA is here for. It is for less than perfect credit that's going to allow you to.
Welcome back to the Hardcore Mortgage Real Estate Business Show, 944. If you're just joining us.
Talk about it.
What a beautiful day,
We got
Michelle.
a lot of energy happening. Let's talk
There's
about
a lot.
that.
And we promise we won't sing the doggone good deal. Me and my dog, won't you come down? Okay, we won't sing
12
that.
Mile Road.
Silly. This is a silly environment.
It's a little
today.
fun here. It should
All
be
right.
fun to buy a house, Michelle. We were just
Yes.
talking about a little bit of trust. Tim, you threw it
Yeah.
out there. Boy, you got to have this great relationship with your lender. Why not?
Mm-hmm.
It's your friend. They're looking there to save you money. They're going to take a little extra time, run that amortization chart for you. Becky's throwing out big numbers here. Show you how much money you can save if you knock it down to a 15-year. Take a look at how much money each month goes out to principal and to your interest. And Michelle, I was about to say to you during the break, if you're looking at $100,000 to $250,000 homes, your agent just has to make the offer. Get it in. Get your offer in. If you're fortunate enough where you get some banter back and forth, now you can even go a little bit deeper into it.
Yeah.
But get your offer in. You know you want that house. And if for some reason you go to the house and it's just not what you wanted, it's just totally doesn't work, okay, you can retreat back. It's not a big deal. They have lots of offers on those.
Yeah, absolutely. It's so important to have a good working relationship with your agent, to have open lines of communication, and to feel comfortable and confident with who you hire. It's free to have a buyer's agent do all the work for you.
Say that one more time.
It's free. It's the best money you're never going to spend to have someone represent you in a transaction. Tim and I were just talking at the break. Why? Because we love what we do and we talk about this stuff all the time. But Tim was just saying on a couple inspections what he's experienced with buyers and communication with their realtor.
Well, sometimes buyers, they whisper and they feel uncomfortable around their real estate agent because if they don't say something, then because they feel so obligated to them.
Wow.
That they don't want to disappoint them and make them go do a little more legwork.
So you probably have to coach these buyers to feel like that they can express what their concerns
are. No, the best thing is just always honesty. Anytime you're spending money, you should be in a good mood.
Right.
It shouldn't be a bummer.
Yeah.
Right. You should be excited about what you're spending money
Absolutely.
on.
And the more people that you have around you need to have a good team. You need a good realtor. You need inspector, someone that you can trust and whoever a family member around, everyone's on your side.
Right.
You always got to watch out for the jealous family member too.
Don't bring them to that. Hey, you guys, let's roll off to this caller here. We got Denise on the line. Good morning, Denise. Your thoughts on a refinance? Go ahead, Denise. Tell me more.
Good morning. How are you?
Fantastic. Sound like a real estate agent, Denise. What do you do?
Well, I'm in the title business. Is one of my clients. So when I woke up and I heard her voice, I wanted to call in. I do have a question.
Sure.
For an equity line, client is currently in an equity line interest-only loan. Does it make sense to refi for a fixed rate for either for 10 years or either 15 years now? Because it's an equity line, I know the rates are tied differently. Does it make sense?
I mean, this is a fixed rate market right now. I mean, it's, so if someone that interest only is going to balloon out at some point in time, right? So we just don't know when that time frame is. So, I mean, obviously a 10, 15 year is going to make the payment go up substantially. But if you're in a position while you've been paying this interest only, taking advantage of whatever it is that you needed to at the time, because obviously a product like that, you're doing it for specific reasons.
Exactly.
But it's, I think it's time to look at securing it down and start paying it down, because you're going to lose an opportunity to lock in historically low rates that are really, we could come in tomorrow and it could shoot up to the moon. So I definitely think it's time for you to kind of maybe think about that.
Interest only home equity lines of credit are reasons to give you bad habits. It's the beginnings of the bad habits. I don't care who you're out there. I've seen a lot, 30 years worth of credit reports and where those balances go. You don't. You end up making that minimum interest. You got to be super sharp to pay that off.
When you take out a loan, the goal of taking out a loan is to pay it back. When you do an interest only loan, that's just a Band-Aid. You're making a payment every month and the balance is still staying the same. So right now, while rates are really, really cheap, really low, you can roll the second into a first on a very low fixed rate. Now, what's going to happen? You're going to say, but Harry, my payment is going to go up a little bit because I'm just paying this interest-only loan and I like the payment. Long term, you're killing yourself.
Yeah.
5 years from now, if you keep making a payment on that equity loan, whatever you're paying, and let's just say, I'm going to use round numbers because I'm only good with round numbers. Let's say it's a $50,000 home equity loan, right? Every month you make a payment for 5 years. So you're going to make 60 payments. You know what the balance on that home equity loan is going to be 60 months from now?
The same.
$50,000. Okay, that's what it's going to be. So
chances are that rate isn't even as low as it is right now.
And it's going to go up. So you need to fix it now. You might have a little pain point in a little higher payment, but over the long run, you're going to save a lot of money. You're going to save a lot of money, unless you're going to sell the house. But I mean, I would tell you, if your goal is you're going to be in that house for 5 years, you got to get rid of that.
The time is now.
Hey, Denise, I'm going to let you plug your title company. Who is it?
Title Partners.
What's up, Title Partners?
Oh, wait, do business with them.
Fashionista.
Do business with everyone.
You know, we do business with Title Partners too.
There you go. Thanks for the.
Getting out of the interest only in the long run.
Yeah, we gotta let you go.
To hear you because
sorry, I had to let you go there.
But it's all good. Tell Sean we said hi over there too, and Tania and everybody else.
Definitely appreciate the phone call. Hey, we want to throw this out there too. So this refinance boom that we got going on here, it's another opportunity. If you bought a house last year, you bought a house 6 months ago, or even 2 years ago, those property taxes have gone up. Yes, you've been reassessed.
Yep.
That's normal behavior. Now's this opportunity now by resetting you're about to get a letter. Again, if your mortgage people are calling you, I'm calling some families and I'm telling them things things they don't even know what are coming. If you're dealing with inexperienced people, they don't know this stuff.
Right.
I talk to them every day. They just don't know. And what's about to happen is the analysis is done on your escrow once a year. That's 30 days away from now. They're going to be sending you a letter late May, early June saying, hey, you got to send us an extra $100 a month. You're short on your escrow account.
And we love success stories. And we actually, like I just did one, Harvey just did one where properties reassessed, took advantage of the low rates. They're now saving $200 a month.
Wow.
Just because we're able to reset that escrow, get it refunded. We're feeding it back, and now you're resetting the table for yourself. Instead of having to come out of your pocket, we can just reset it, lock in a lower rate. It's done. It's like a no-brainer.
Get the knowledge behind you. Meet with that loan officer. Meet with your meet with your real estate agent.
A person. Meet with the people.
Hearing this oddity out there, folks. Stop. Look, you don't have
Stay
to touch them or kiss them, right?
Yeah.
If they're coughing or sneezing, maybe you do want to stay away.
Right.
But other than that, definitely meet with them, because the amount of knowledge that they can share with you is just extraordinary, and it just giving you that knowledge gives you that confidence.
Even if it's just to go over scenarios and find out what's possible. It doesn't mean it's a commitment phone call. You're not like signing contracts over the phone, right? It's
a
just
commitment phone call.
That's all it is, right? It's like, hey, Becky, Harvey, what can you do for me? I mean, what do you get another opinion? Call a home inspector, call a real estate agent.
We typically ask a few questions when we meet new people, whatever, simple question about escrows, earnest money deposits, seller's concession, that they don't know the answers. It means that you're missing out.
Right.
And again, it would be more fun if you knew it. It would be more fun. You'd be more educated, and you know what to do next time when this comes around, or someone calls you and says, hey, everyone's refinancing. You have to know why it would make sense for you to refinance.
Absolutely.
Not if you're moving next year. If you're not staying in that house, well, you probably can't refinance now, because you won't recoup that money in time.
Yeah.
So again, it's all about running the numbers and getting that knowledge behind you. Hey, if you want to sneak a call in, 248-539-9797. Always Michelle Saward, eXp Realty, the Queen of Downriver. And of course, Tim Bartaway here, who's a great home inspector. Actually, Tim, we got a ticket text here. So it's Tim Bartaway, and he's at Premier Residential Services. You can look up Tim. You just got to Google his name, and there you go. He'll be right there. Tim's a great home inspector, and just a little salute out there to all the home inspectors out there that are going up on and taking the ladders out there, that are going in those crawl spaces and doing it the way they should be getting it done. And again, if a home inspector, Tim, let me throw this at you. If you find something that could be wrong with the furnace, you point it out to these prospective buyers. Now they can decide if they want to hire even the heating and cooling guy now to come out and take even more of a thorough look at it.
Right. Everyone should have a carbon monoxide test done on their furnace. Absolutely. Some cities make the seller provide that. I think every city should, because it's a silent killer.
It is. And I'm glad you brought that up, because it reminds me that every time we're supposed to move the clocks back or move them forward,
change the batteries.
Change the batteries in your fire alarms there in the house. And if you don't have those, please get those up. Be safe here in 2020. We're all Michiganders. We want to keep you safe and tidy, and we want you to keep buying homes and borrowing money on these homes.
Also, Harvey, plug our podcast. We're doing a podcast. We've done a podcast now for a month and a half. We really get Becky, Lisa, Harvey, John, myself, people that have been in the business, you're talking about hundreds of years collectively in the mortgage industry. So we're doing a podcast because it's a cool thing to do. And also we get to do it unencumbered, no commercials. We don't swear, but we're a little looser. We wear funny costumes maybe, but we dispense great consumer advice, and it's really a consumer advocacy podcast. It's not geared to anything in particular other than helping people out and saving them money and being objective and giving helpful hints, but we get to do it unencumbered. So it's great, and we love it, and we love the radio show. We've been doing this now going on 21 years.
Whoa. And
here's the thing. We just want to make sure people are set up for success. We want them to win.
There's so much knowledge out there, and a lot of people are they don't know any better.
Right.
Whether you're refinancing, whether you're buying a home, selling a home, people just don't know any better. So we just our hour on Saturday is just not enough. We just want to take it a step further, and we're going to start having guests on as well, so that way they can touch on these certain points. But everyone in this room that we surround ourselves with is top-notch people. We don't want to just work with any old person. We want to work with the best of the best that are going to take their clients to the next level, because that's what we're trying to do.
And we take it personally, and it goes like this. We're trying to disseminate accurate versus inaccurate information.
There's a lot of noise out there right now.
Yeah, there's craziness going out there, and we will go ahead and we will be objective with you and say, hey, listen, you got a great deal? Take it. You trust somebody? Go ahead and take it. You need a home inspection, because don't invest $200,000, $300,000, $500,000 on a house. And so what? You're going to pay, Tim, what do they pay for a home inspection?
Usually it's like $325
Okay,
$325.
so you pay $325,000 to protect the $200,000 investment. I don't know. I like those odds.
Okay, sounds good enough. A couple $100 to give yourself a peace of mind. Guys, fastest hour in radio. It's over, but you could always call Capital Mortgage at 1-800-LOW-RATE, the best mortgage banker. We'll set you up with some great real estate agents. Then they set you up with great home inspectors. And at the end of all this, everyone's real happy. Yeah. All right, keep it here on 97 on the Ticket. I see Pat Caputo. He's coming in with sports. And for Becky Alley, for Harry Glanz, I'm Harvey Freed. We'll catch you next Saturday.